Long term, I'm highly confident that it will continue to outperform and be much higher. And by that, I mean by the end of this year, next year, the following year. Short term, it could do anything it wants. As you know, it's quite volatile. If you look at any of the statistics, I mean, the number of Bitcoin holders, the number of Bitcoin addresses, all of this, it's growing at 20 or 30% a year. And so as that continues, there's an adoption curve effect that I think is going to, with a fixed supply, it's just going to push the price significantly higher. To my way of seeing end of calendar 2024, we could be at 100, we could be at 300. I have no idea.
Bitcoin's significant event took place on April 19th. What does this mean for Bitcoin's price moving forward? We'll discuss the future outlook for Bitcoin with Lawrence Lepard, managing partner of Equity Management Associates. 1 month after Bitcoin's big halving event, people in the crypto community want to know where the major cryptocurrency is heading. The latest Bitcoin halving, a technical event that cuts the reward for mining new Bitcoin by half, occurred on April 19th to 20, reducing the reward from 6.25 Bitcoin to 3.125. Bitcoin's halving, designed to ensure the cryptocurrency's scarcity and protect it from inflation, happens every 4 years. Bitcoin didn't jump significantly after the halving process and currently hovers roughly 12% below its record high of $73,803 set in March. However, it's still up about 140% in the past year. Historically, Bitcoin has experienced significant price increases following the halving event. Bitcoin's price is highly unpredictable, Lepard emphasizes, noting it could fluctuate wildly within short periods. Despite this volatility, he expresses confidence that Bitcoin's price will be significantly higher in a year or two. By the end of 2024, Lepard speculates Bitcoin could range from $100,000 to $300,000, with $100,000 being a relatively conservative estimate. By 2025, he sees $250,000 as a possible target. Back in April, Standard Chartered had forecasted that Bitcoin could hit $100,000 by the end of 2024. Now, the bank projects that Bitcoin's value could reach $50,000 this year and $120,000 by the end of 2024. Ready to delve deeper into the topic with Lawrence Lepard? Make sure to subscribe and turn on notifications to stay updated with our latest content.
At the end of the day, the block reward, whether it's 6.25 or 3.125, it's the difference between 900 Bitcoin a day and like 450 Bitcoin. That's not the biggest determinant of demand, in my view, of supply and demand in the market. That's a small number compared to the 19 million coins that are out there. It has an impact, and historically, there's always been a price run after a halving. If you look back historically. So I fully expect we will have a price run. But if you actually also look back carefully, you'll see that in some of the prior halvings, it actually went down for a little bit before that price run began. It took a while. There was like a lag effect for the halving to have an effect on the price. And so it's entirely possible to me that would occur again in this particular time frame. As I said, Bitcoin's a wild animal, and you just don't know at any given week, day, month what it's going to do. I mean, it could go to 50, it could go to 80. I mean, I have no idea. I will say this. I will say this though. I have great confidence that in a year or two, it's going to be much higher than it is today. So I agree that the ETF launch is a really big deal. I mean, it allows a huge pool of capital that could not easily buy Bitcoin to now buy Bitcoin. So I mean, to be honest with you, I'll give you the spread. I mean, to my way of seeing end of calendar 2024, we could be at 100, we could be at 300. I have no idea. I doubt we're below 100. I highly doubt that. That's, from 60, that's a 40% move or a little higher. That should be pretty easy, 50% move. That should be pretty easy from here. To their number of 2025, 250, yeah, that sounds possible. It's very hard to know. It really is. And there are a lot of models. There are a lot of ways of looking at it. I look at them all, I weigh them all, and then I say, you know what? It's a new thing. I think Michael Saylor said all your models are broken. I think he's kind of right. We just don't really know how it's going to behave. I mean, it would not surprise me at all if it shot up to 250 quickly, but it also wouldn't surprise me if, a year from now we were only at 110. I mean, you just don't know. Presently, Bitcoin has a hard cap of 21 million coins. We're presently at 19.6 million of them issued. So a large majority of them have been issued, but we still have a bit more to go. And until the halving, which literally occurs today, they were increasing the supply by about 1.7% a day through the miner reward, and of course that'll be cut in half. So as of after the halving, the Bitcoin supply growth rate will go to 0.8% per year, making it sounder than gold on a stock to flow ratio. And so, the reason they, in my opinion, they're sound money is that the government cannot print them. Gold, you can only get the old-fashioned way by breaking rocks and digging it out of the ground, which costs time and money. And Bitcoin, you can only get newly issued Bitcoin by running a Bitcoin mining operation that consumes electricity to do the proof of work to validate the chain. So they really represent, analog sound money as gold and digital sound money as Bitcoin.
Lawrence Lepard remains highly confident that Bitcoin will continue to outperform in the long term, predicting much higher values by the end of this year, next year, and the following year. Younger people tend to favor Bitcoin due to its historical performance, even though it is correlated with the Nasdaq and experiences wide price swings. According to Bloomberg, the 90-day correlation coefficient between Bitcoin and the Nasdaq 100 index, a tech-heavy benchmark, reached 0.46 this week, the highest since late August. Lepard predicts that over time, Bitcoin will decouple from the Nasdaq, as Bitcoin is a measure of liquidity and will eventually move independently of traditional risk assets. He warns that to manage this inflation, the Federal Reserve might need to hike interest rates further. Now, let's shift our focus to a video.
Long term, I'm highly confident that it will continue to outperform and be much higher. And by that, I mean by the end of this year, next year, the following year. Short term, it could do anything it wants. As you know, it's quite volatile. I think what's going on in Bitcoin is just the knowledge, very much like gold. I mean, and I do consider, gold is 5,000-year-old money. It's the soundest form of money ever until Bitcoin came along. And, it's analog sound money. Bitcoin's digital sound money. And I think that what's going on there is you're just seeing more and more people becoming aware of the fiscal and debt problems that the world has and looking for an escape hatch. Gold's one and Bitcoin's another. Turns out Bitcoin has performed better than gold. So, younger people tend to aggressively go towards Bitcoin. But as you point out, it has been correlated with the NASDAQ. It has been correlated with risk on, and it does tend to have pretty wide swings. And so it's not suited for everybody. There are people who, prefer not to have the volatility, and they might, and they're looking for a sound alternative. They might choose gold. In turn, if you're looking for the most rapid growth on a performance basis, Bitcoin has clearly been the better choice for the last 10 or 15 years, and I think it will continue to be a better choice. A lot of people have said they're very correlated, and if you look backwards, there has been a certain amount of correlation. It trades like a risk asset, but I do believe that over time that's diminishing, and I think over time they will completely separate, where you could actually have the NASDAQ not doing well and Bitcoin doing well. But Bitcoin's a measure of liquidity, and the NASDAQ is tied to liquidity as well. So it's going to take time for the two to separate. But I do believe over time they will separate. But if they print a lot more money, my new base case, I've kind of revised this. I used to think we were going to have quite a big market downturn and quite a big recession. I'm actually, and maybe we will, I'll be wrong again, but I'm now, based on what I'm seeing, I'm now kind of starting to think, you know what? We're actually not going to have that big a downturn, that big a recession. We're going to have a pretty hot economy. It's going to be pretty healthy. The stock market could go higher. There'll be a lot of good things happening with one exception. We're going to have serious inflation. Because they're going to have to grease the monetary skids, the velocity is going to pick up. And with those changes, there's no way you get out of this inflationary trap. And so it's entirely possible that the Fed ultimately starts thinking maybe they have to hike rates further. I don't know that they'll do that. But, as you pointed out earlier, they've certainly backpedaled from a lot of rate cuts to very few rate cuts based on the strength of the economy. And so the new data that we all have, because we kind of all thought there's got to be a recession coming here.
Bitcoin has been variously described as digital gold, an inflation hedge, and a store of value. However, its price volatility has challenged these narratives. The U.S. approval of spot Bitcoin ETFs in January directly introduced the cryptocurrency to a broader investor base. Many will continue to be surprised by Bitcoin's changes in dynamics, but the analysts say they won't be surprised if the flagship cryptocurrency crosses the $100,000 mark this year. We invite you to share your insights in the comments section below. If you found this content valuable, give it a thumbs up, and remember to subscribe to stay informed. Thank you for joining us on this journey.